Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, June 2nd, and beginning of summer here, I guess, for a lot of kids here. So let's jump right into it. We got a couple of economic news releases scheduled for today. We'll start off with the weekly jobless claims. So last week, we had 268,000 people apply for unemployment. Forecast for this week was 270, and it came in at 267. So a little bit below expectations, which obviously it's a good thing with less people applying for unemployment. And also today we got, because of the short week, we would normally have that on a Wednesday, but today because of the short week, they're releasing it today, is the ADP employment number. This is kind of like our appetizer for tomorrow when the Bureau of Labor Statistics provide their numbers out here. So it kind of gives you kind of a prelude as to what to expect here. Now, we had 166,000 people apply for unemployment last week. Forecast for this week was at 265, and it came a little bit higher at 173,000 people applying for unemployment. So still not a bad number, but obviously something we have to keep our eyes on here. Now, tomorrow to kind of prepare for, they're going to probably kind of figure it might be skewed a little bit because Verizon employees, there's about 35,000 people that are on strike, and that considered unemployment. They would kind of fall into the unemployment category, and most likely will fall underneath the Bureau of Labor Statistics numbers for the month of May. Now, so be a little cautious with that. The Fed probably will disregard a little bit of that, maybe factor about 35,000-ish in that range for people applying for unemployment, and maybe subtract that from it because now they're back to work and they're being productive and such. So be prepared for tomorrow. That could create a lot of volatility for this week, the job numbers, because it's kind of giving an indication that the job market is pretty strong right now, and therefore it could increase the likelihood of the rate hike coming this summer. Most likely not in June, not this month, but most likely it could happen in July, and primarily because, as we had indicated, if you've been following the show, we've been talking about the Brexit coming up, the election on the 23rd of this month, which is a week after the Fed has their meeting, the FOMC meeting. So they probably want to see how things evolve from that. So wait till another meeting to go afterwards before or after to see how that evolves. So if there's a Brexit, they may hold off on it because it could affect the economy in a negative manner. If they remain with the European Community, they may go ahead and raise the rate. So they're going to probably hold off on that in June and wait till July. Right now, the stock market's down a little bit. A lot of it has to do with the OPEC's India decision of putting a cap on their output production. So they basically failed to have a production. So therefore, prices came down a little bit on oil prices, and kind of stock market is taking its cue mostly from that. ECB basically announced that they are making no changes to interest rates. Was their announcement? They're not going to raise or lower interest rates. But he did because the inflation is so low in Europe that he's still got tools in the toolbox and is willing to go more in the negative interest rate hike territory if that's going to help try to stimulate the economy and stave off any deflation over there. Bond market, here we go. We got a 10-day moving average. We have the 100-day moving average up here. We're still at that resistance. We did fall back yesterday to basically the same level where we left off on Monday. I'm sorry, excuse me, on Tuesday, our first day of the week here. So we basically came below the 25-day moving average and the 50-day moving average. They're both basically at these levels right here, and we're kind of resting just above them today. We could get hopefully a little bit of a spike with today's news. And then tomorrow, again, tomorrow could help boost us or it could also sink it. So our next level of support would be this 100-day moving average here, which is about approximately 20 basis points. All right, folks, I hope you guys have a great day. Basically, rates are the same as where we left off yesterday, and even money. So rates are about the same. There's really not much difference in interest rates, this week. All right, folks, you guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Have a wonderful day. Bye-bye.